Welcome to the Broken Pie Chart Podcast, episode 297. I'm your host, Derek Moore. With me once again is my semi-permanent co-host, Jay Pestrichelli. Jay, welcome to the pre-election one. And
I know I can't wait to hear what you got. I won't be on it, but I'm going to listen to it. It sounds amazing.
Yeah, well, for the listeners, so we record our normal podcast, and then it will just be you keep listening, and we'll do Spencer Wright and I did an election preview. We dug into the numbers, some of the interesting stuff we're seeing there, made some predictions. So you got to listen on that. Even some ties. I'll tease that. There's a couple tie scenarios and what happens then. So
that sounds like fun.
Yes. So all right, let's go to the markets though. Yesterday,
a little scary this week, huh?
What happened yesterday? It was all going so well.
What happened? I don't know. Yeah, it was. Things were going fine, and then a little low. The big tech guys didn't beat by enough. I mean, the numbers were pretty good, right? We had.
Meta. Was it the beat, or was it they're all spending a lot of money on AI?
Oh well, I mean, it seems like the market didn't like their expenses, right? CapEx seemed high, and everybody blames AI.
Aren't they all just spending money with each other?
I mean, there's a good chance, or developers, or I don't know,
okay.
Right? And maybe hardware. There could be a hardware thing in there.
Doesn't that point? I'm not saying to buy NVIDIA. No, that's not what I'm saying. You want to buy it, you buy it. You don't want to buy it, you don't buy it. But well, doesn't that point to like the picks and shovels? I don't know.
It does. Well, anyway, the market didn't like it very much.
We had
a pretty bad day. And so, I mean, bad day, but we've had worse days, right? But down, over 1.5%. And today, and then Friday, when we're recovering this, the market tried to fight back a little bit, but really, not really so much. I mean, up a 40 basis points, it's okay. It's, I'll take that every day if we can. But it looked like it had so much more potential, just got weak into the end. And I'll say, Derek, like I will, even with yesterday, Thursday being a rough day, and today showing some weakness into the close, like this seems fairly resilient in the face of a presidential election. We've seen much, much worse than this leading into the last few. So, I mean, the resiliency here, despite a little pullback, which absolutely is expected, still feels like this market is kind of bucking the trend of choppiness into the election. I know the VIX is up a little bit. Let's see where on the VIX. VIX at 21.8. All right, yeah. But I don't know. Market still seems to be kind of holding on just fine. We'll see what happens next week. But
By the way, I know we were on earlier this morning. We were doing some extensive analysis for one of our SMA strategies that we run, and I think both of us were like, would it surprise you if we just wound up seeing a gravestone doji candle today? That's when you have a long bar. Like it's a gravestone doji. It's almost exactly a gravestone doji. Well, that's
you got a T-shirt for that gravestone doji.
I'm gonna see if I can create my own. I will.
You could. It's going to be the most interesting T-shirt ever.
Maybe so. All right. So, we need a store. We need like merchandise for this program. Maybe that's
the Broken Pie Chart podcast store.
Yes.
Great. Yeah.
With gravestone doji. By the way, can I tell you something? Every once in a while, I look into the just who's listening and what regions they're coming from. We are doing well in with our Chilean listeners on Spotify. I think it's the second or third, besides the U.S., highest listenership over the last couple of weeks. I have no idea.
That's great.
Yeah. If you're from
dojis down there,
is it because it's in the southern hemisphere? Would it be reversed? I don't know.
Would it be a hammer in that case?
I don't know. But if you're a Chilean listener, if you're from Chile, if I'm saying I want to say that correctly, send us an email, derek.moore@zegainvestments.com. That's Z as in zebra, E as in Eddie, G as in George, A as in Apple. Investments is up to you to spell correctly. And what I was just looking, I said, oh, that's interesting.
That's great. They see the moon upside down from what we see in the northern hemisphere. But
is that right?
Yeah, it's different. You're looking at it backwards. The moon isn't upside down, just your perspective is upside down. When I was in South Africa, I took a picture and I was like, yeah, it really is upside down.
Oh, that's interesting. And you can probably see the Southern Cross in the Southern Hemisphere too. You can
Sure.
see in Hawaii certain months. The star,
Yeah.
yeah.
Yeah. Yeah.
All right. So we talked about the
We talk a little bit. I'll just say the other thing, like one of the things we talked about, and I know we're joking about the candlestick pattern,
yeah, of course.
but it's also an inside day, which is where the trading range doesn't get farther outside of than the previous day. So today's range was inside yesterday's range, generally considered to be kind of a day of uncertainty, right? Maybe even bearish from time to time. So inside day, Gravestone Doji. Maybe that's about as scary as we could get leading into Tuesday. I don't know.
The other thing, we've said this for a while, how October, the month of October, the October VIX futures was sort of the highest point for a while on the curve. And we always say spot VIX, the one people see on CNBC, and the future eventually coalesce to one another. You don't know if the spot's going to go up to the VIX future or the VIX future is going to come to the spot. I mean, pretty much the VIX spot went to the future for
Ah,
October.
so the future, which is actually a vehicle that can be traded, as
Mm-hmm.
opposed to the index, which is just a mathematical calculation. The future ended up being closer to what happened. Interesting. That doesn't
I
always happen that way.
No. And the challenge is if you bought a call option, let's say you bought a $20 or $21 or $20 call option back in January, I don't think you made money on it because pretty much the
That's where
future
we
stayed
are.
where it is. Yeah,
Yeah.
unless you sold on August 5th, then
Well,
anyway. Can I talk? I can't believe I'm going to do this, but I'm going to do this. Can I talk about Bitcoin for a second?
oh sure. I can't wait to hear what you brought today. I'm
Uh,
sure it's all
uh,
fanfare and hearts. What do you got?
no, it's I'm doing hard news here. This is real hard news reporting here. So in the earnings announcement from MicroStrategy, I don't know if you've ever heard of that company.
I might
Michael
have.
Saylor
Mm.
is the CEO, the guy there. Apparently, they're doing what's called the 21-21 plan, and this was in quotes. They are going to secure 21 billion through equity offerings and another 21 billion via fixed income securities between 25 and 27. And I think it's a 3-year, $42 billion Bitcoin investment plan. So they're going to raise money and they're going to buy Bitcoin.
I mean, that's
Is
all that he's been doing. So this is not a surprise. It's just the new vehicles that he's using to do it, right? I mean, MicroStrategy has been, borrowing money to buy Bitcoin. I mean, this is their plan. This is what the company does. I'm gonna listen. If you're gonna come out with facts, you should have at least mentioned it hit an all-time high this week, right? Of 73,000. You're gonna leave that piece out.
Well, I'm going to tell you something. Another hard news piece here. This is
Yeah.
really inside stuff here. MicroStrategy. This is according to BitcoinTreasuries.com. I have no idea who that organization is, but I searched and I was curious whether they're up on their holdings or not. They own 252,220 Bitcoins as of September 20th, 2024. That was the end of the reporting period. No, it wasn't. That wasn't the end of the quarter. Anyway, as of then, the average purchase price was 39,292. So you're telling me it hit an all-time high of 70 something thousand? That means they're up on these.
73,000. Yeah, over 73. I think I saw a 74 print actually, but let's say 73 plus.
So they've almost made what is that?
You want to go
43%? Something like that.
So not bad. So worth them borrowing to do it.
As it worked out, yeah.
As it worked out for them. I'm not saying, by the way, I am definitely not saying you should borrow money and buy Bitcoin. I am not saying that. You guys are not Michael Saylor. Sorry, unless Michael, you're listening. Welcome. Nice to talk to you again. I would tell you that this is the business plan for MicroStrategy, right? And he will talk about the benefit of what his company brings to investors, right? There's things you could do with MicroStrategy that you can't do with Bitcoin or even a Bitcoin ETF, right? You can buy MicroStrategy on margin, right? So you could borrow to buy that. You can use options over MicroStrategy, which we trade for some of our products. You can use it as collateral to do other things, right? So, like, if you listen, there was an interview that he did right after his earnings They had earnings this week. He talks a lot about the utility of his stock, really as a vehicle for Bitcoin over anything else. So they're borrowing they're borrowing to buy Bitcoin, and so the financing. And I wasn't familiar with the exact structure that you were mentioning there a minute ago, Derek. But just to
That was,
hear,
yeah.
the financial instruments and the financial engineering they're using to be able to add and buy more Bitcoin over the next few years. That's his company now. That's the plan. That's what they do at MicroStrategy.
What does MicroStrategy actually do?
That's it. They buy Bitcoin.
I mean, I'm looking at Bloomberg. Their description incorporates business intelligence software and related services.
Yeah, that might be the Bitcoin phase of MicroStrategy. They've been around for a while.
Oh, they go back to the .com era, don't they?
I remember them in March of 2020. I think they were
Yeah.
the first one to kind of start, the miss that started the cascade there. Sorry, I'm not picking on them on that one, but yeah, they've been around a while, right? And so they really did reconfigure their business to be more of a Bitcoin representation and aggregator of Bitcoin.
I was going to go into the financials, but I don't know how they're accounting for. I don't know what the rules are as far as marking to market Bitcoin versus their purchase versus everything else. So, but anyway, it's interesting. It's a novel thing that's in the market right now, and I mean,
I think you should expect, if you're buying MicroStrategy, you're buying
yeah.
leveraged Bitcoin exposure.
But it goes to him, and I'm a Bitcoin skeptic, but you and I talked about that interview where he said it's not a currency, and I said yes, I agree with you, Michael Saylor. He says it's digital property, and he looks at it as an asset. So in his mind, and I'm speculating here, he's like, I'm going to borrow just like a business would borrow to buy a new coffee maker, because assuming you have a coffee shop, and another one would maybe generate a return on that investment. You know where I'm going here. It's just he thinks it's going to give a return, I guess, right?
It's a store of value that will be more in the future than it is today.
Yeah. Okay. All right. Well, we'll watch the 21-21 plan. That could be a T-shirt too. Okay. Let's talk about employment. And today, so the unemployment rate was 4.1. It was also 4.1 in September. But you know me, I like to do the math. And for whatever reason, we're always showing multiple decimal points, and we don't do that. So October unemployment rate was 4.145%. And last month it was 4.051. So it's up, what is that, 7.4 basis points?
Yeah, more than half. Well, you could even round that up to 1%, but you don't really see the number when you do the rounding.
Yeah. And, you look at the civilian labor force fell, the employed people fell, the unemployed went up. So this was not a great report.
No, not at all. I mean, the total net jobs, which I think you almost buried the lead there, Derek, was
yeah.
Only 12,000 new jobs, right? That's the lowest we've seen in quite a while. I thought the market would have reacted much more badly to this. Forget the Gravestone Doji. I thought it was just going to be the third leg of a three black crow pattern. Don't start me on that one.
Yeah, you know where I'm going with this. It's bad news is good news. Bad news is good news because, oh yeah, the Fed's going to lower rates and the market's going to go bonkers from that.
Yeah, I mean, more stimulus, right? The thought is like, ooh, the economy could get stimulated again and avoid the R word, the recession word. But market was just at an all time high. I don't know. I mean, it feels like you and I have always agreed on this. Bad news is good news is not sustainable, because at some point, bad news is bad news.
Well, people who want bad news are assuming that whatever the bad news is bad enough that it won't cause a problem, but it will cause the Fed to lower rates, which will, it's a misguided wish, I think, right?
Yeah, look, do I like when the Fed lowers rates? Yeah, markets like that. That's good. That's good bullish signal, but I don't like it at the as a result of something that was bad, right? Like you're forced to do it, right? You get bailed. Nobody wants that. So yeah, I don't know. I never loved that approach, but look, sometimes I think when you're in a really bad situation, like let's take 2020, right? So you're in the pandemic and you're like, wow, this market is going to need some help, right? That bad, it got so bad that the Fed did stuff it never did before to kind of help stimulate the market. Of course, market closed up that year strong, pretty strong, right? Double digit up. So as you got through that scenario in February, March, but I don't think anybody wants to go through that kind of trouble, right? Let the market do its thing, grow, let it grow.
I'm looking at these categories. The government added 40,000 jobs. Government always seems to add jobs. What's going on there? All right, so too much. Well, we'll get to the spending in a little bit.
Yeah, maybe.
Construction. So I like to look at construction. So construction, 27,000 in September, only 8,000 this time. Durable goods, minus 47,000. So
What's in the durable goods category?
that's like your washing machines and stuff like that. It's durable
Oh,
goods. Yeah.
okay. Not
Let's
everybody
see.
knows it. I hoping you expand a little. That was a
Well,
setup
that's
question. There you go.
is that
I know what it is.
temporary help services? We'll get to that in a second. Minus 48.5 thousand jobs. That's the only one with like a point something on it. That was really that important to put that. Why not just round up there like you do everything else?
Well, because you got it. Well, there's a 6.0 on the motor vehicles and parts. I'll give you a point on that one too.
Yeah. Yeah. Yeah.
What's with
All
the
right.
professional services?
Yeah. Minus 47,000.
Not great.
Not great.
That you're in professional services, aren't you?
Yeah. You trying to tell me something?
I'm
All right.
just saying.
So, by the way, non-farm U.S. payrolls had consecutive positive months, 1939 to 2024, 46 consecutive months of positive establishment survey adding jobs. That's pretty good, right?
46 times in a row. Yeah.
46 months in a row. Yeah.
Yes. I mean, and does that happen often?
Well, I just told you it was 46 in a row. The
No, but how
previous,
often do you have 46 in a row? Is it like, oh yeah, this always.
well, I don't know, one, two, three, four, five times since 1939.
Yeah, and only twice has it been more than 46, right?
Yes.
You got your,
Yes.
what's that, 86 to 90, and then the big one was, post the great financial crisis of '09 all the way through probably to the pandemic.
So you're saying we're at a top and we should short the market?
I'm right. That's exactly what I'm saying.
No. That's not what
Not,
we're
I'm
saying.
not saying that. I'm just saying like this has been a pretty good run,
No
and
doubt.
there has been a run. So the really big one was 113 months in the row. That's the one we just kind of came off of, where you had consecutive positive growth in the non-farm payrolls. So like, while this is good at 46, it certainly can be better, but this seems like a normal place in the past that it's kind of topped out, right? You got a few times where you've had this amount. So I don't know.
And
When you come in at 12, feels like we just skirted 12,000. This time feels like we just skirted, not
yeah.
hitting the consecutive month number.
Well, and you could have a month that's minus 10,000 jobs, then the next month is plus, and the month after that is plus.
And
And
there could
that,
be a whole bunch of months, and it could be a lot more plus, and all, but still, you got the minus in there. It kills the consecutive thing. Um, what I think about when I hear about consecutive like records of
oh
things that
boy,
have happened in a row?
New York
Uh,
Giants losses in nationally televised
on
games.
primetime games, no,
Yeah.
or the Steelers winning home games on Monday night 22 consecutive times as they just beat the Giants. No,
Yes.
but it is a sports analogy. I believe Nebraska, the University of Nebraska, and Zega is a Nebraska company, by the way. We have an office in Nebraska. I believe the University of Nebraska has the longest running streak for consecutive sold out games in college.
Oh,
It's some crazy number. Somebody could look that up and send it. I know we have listeners in Nebraska.
we do. We
Yeah.
do. I see those people too, as well as our South American listeners for sure. All right. A couple other things to this payroll. One is this is from Michael McDonough at Bloomberg. temporary help services saw its largest monthly decline since the 2008 financial crisis period, excluding the pandemic. So temporary workers, and we just mentioned there was minus 48,000 plus job loss
So you think it's
for,
because companies are dropping the temp help or because they're converting them to full time?
oh, this I don't know. But wouldn't we see that somewhere else?
You probably see that in new jobs,
Yeah, you probably
right?
see that in new
You
jobs.
probably see in new jobs. And we just said there's been 40, 46 consecutive months of new jobs. So which is it, Mike Mandana?
Well, he also this is kind of interesting. 2024 has been a remarkable year for the number of U.S. employees not working due to bad weather. The This is according to NSA, has reached several. Okay, I don't know what NSA stands for, but it's a chart and it shows. Here's why I bring that up, Jay. There's a quote in from the BLS in the release. The initial establishment survey collection rate for October. So the establishment surveys where they call businesses, the household surveys where they call people on the phone in at their house or I guess their cell phone. But the rate for October was well below average. However, collection rates were similar in storm-affected areas and unaffected areas. A larger influence on the October collection rate for establishment survey was the timing and length of collection period. This period, which can range from 10 to 16 days, lasted only 10 days and was completed over several days. So maybe the Hurricane Milton that struck Florida October 9th caused people who, I don't know, maybe it messed up this 1 month of employment stuff. No? You buy it?
No, I'm also
Okay.
gonna no. I like what look. Let's look for a more obvious thing. More people are having to go back into work now, right? Work from home is winding down. You look at those years of 2022, 2023. Like I get it. Of course, those were lower. Maybe more people just weren't going in to work. Like if you work from home, are you not working due to bad weather? I guess if a hurricane comes through and look, I live in a hurricane zone. I guess that's it. I guess it doesn't matter, but I don't know. There's a weird stat. I'd like to know more about this thing. Like, what's
No,
that mean?
no, you wouldn't.
No,
If I
you're
come
right.
back next week, you're gonna be like, "Really? We're gonna talk about this
I'm already
again?"
over it. Thanks,
All
Mike
right,
McDonough.
we're
Thanks.
done. No, he puts out really. So what he does is in
I do
Bloomberg,
like him, by the way. I
yeah,
got
he'll
to
put
say,
together like awesome charts, and you're like, "Wow, how did he do that?" And a lot of times he'll put a link to it, and you open it up, and it's there. There's some really good election stuff too. All right, so let's tie this back to the markets and interest rates. The November 7th meeting, which is next week. So we got an election on Tuesday, and we got what? We got Thursday. Is it Thursday? We get the
Wednesday
Fed.
usually, right?
Is it Wednesday? Oh, all right. Friday's the first. We're recording this for second, third, fourth, fifth,
Seventh is a
sixth.
Thursday.
Maybe they pushed it back because of the election.
I mean, who
Just,
schedules these things? Elections and Fed meetings. I'm kidding. I'm kidding.
yeah. Well, okay. So the expectation is we'll have a cut of 25 basis points, just 25, and it's just under 100%. So that would bring the implied rate to 4.58. I don't know. I mean, to me, like what's coming up next week is the market will not like it if the Fed's like, oh no, we think we're good. We think this is one and done. We
Well,
actually all that
the
stuff we told
market's
you.
definitely not expecting that. If that happens,
No,
yeah, no, the market will.
no, but they just put out their target. They just put out their dots, and the dots were higher than the implied rates. So maybe the interest rate markets is like, okay, maybe we do believe them. They actually said we're only going to here, and this is where we're going. I don't know.
Yeah, I don't know. I look. I think right now, the probability of the cut, right? The one cut is at 97.2%.
Yeah, that's
That's
right.
like if that doesn't happen, that will be concerning to the market. That would be a Fed surprise. Market
Hmm.
typically a negative surprise. Market typically doesn't react well to that. And you've said this that the market usually has a fair amount of conviction going into the
In
Fed
the
meeting.
Powell Fed, yes.
Yeah,
Yeah.
that's true. In a Powell Fed, thank you for that clarification. That Greenspan years, like who knew what he was going to do?
Well, the
Um,
50 basis point one was the one where it was really in between. Like that was a
That's
little
right.
bit of a
The last
yeah.
time it was a
That
little bit of a crapshoot, right? 60, 65, 35%, one,
yeah.
2 to 1, and they got the two. But look, I feel like, yeah, I don't think he's going to want to disrupt the market, and I don't think this will change his decision. But I think this gives him the runway to cut without shocking anybody. Um,
All right. Well, here's another thing we got to bring up. We've said this, and I think I half-heartedly or not half-heartedly said it wouldn't surprise me if a year from now mortgage rates and the 10-year yield were higher when the Fed cut rates.
so you're
So
saying the Fed's cutting rates, and what you had said in the past was, hey, don't count on that actually being a usable rate. Like,
right.
rates may be higher even though they're cutting now.
Right. And I go back to the 94, 95. They cut in July of 95. A year later, the 10 year 6% goes to 7%. Jay, since September 18th, mortgage rates are up and the 10-year treasury yield is up. Where 10-year treasury was about 4.37% today. It was 3.7 when the Fed cut. And mortgage rates went from, I'm going to guesstimate this, like 6.6 to 7.28 today. Is that right? They're up that high? That's the average.
Yeah, the
The
average. You're
bank rate
right.
US average, yeah.
That's a good, yeah. So mortgage rates are back up to 7.2. It's interesting. Yeah. And
Well,
it's
they're based
almost
upon the
like to the
10-year, so of
day.
course they are. And there's usually a spread to the 10-year. So,
Yeah. Although they're tight. Well, I know the chart's off a little bit, but we talked about closing the gap last week, I think, between the 10-year and mortgage rates, right? Like that's a gap that, seems a little
right, so
extreme.
7.28 minus 4.37, you say that's almost 300 basis points. That is a wide historical spread between the 10-year and mortgage rates.
So
We talked, yeah,
that's right. So that's the point, which is like,
yeah.
normally they're not this far apart, but they both went up after the Fed cut of 50 bips.
And I don't know about you, but a lot of people, well, I shouldn't say, I don't know a lot of people who are needing to sell a house, but those that are planning on it have said, oh, we might wait because we know interest rates are going down and people will be able to afford more. And my comment to all those people was like, I don't know if that's what you're banking on. I'm not sure. It might happen. It might not, but I don't know. I don't know
No,
about that.
I mean, look, I mean, you and I have done presentations to people where,
Hmm.
we presented, different builds on bonds, and and the thought was, well, rates are going down, and these bonds are, and we said, I don't know how that rates are going to go down over the next year. What do you know that the rest of the world doesn't know? It's not obvious at all.
No.
And it's just, people make this assumption, but they don't understand the dynamics, right? Unless you're in like that, 3-year treasury when the Fed cuts, you don't know what the farther out on the curve is going to do. There are
Yeah.
many, many, many other factors that impact interest rates versus what's happening on the short end of the curve, which is what the Fed does control.
I don't know what the impact is for housing, but I think what everybody thought was going to happen doesn't. We did see this. This is a chart. Who is this? 314 Research. I'm not sure who these folks are, but somebody posted this on Twitter. Housing starts minus completions, and starts trailing completions by most since the great financial crisis. So I'm trying to help me out, Jay. This is if starts are higher than completions, it means like, hey, we're building, and on a smaller amount, hey, this one's good to go. Get it off the assembly line. I know it's not on assembly line, right? That's kind of so. Is this saying that construction is slowing on new housing?
Yeah, well, I would say, yeah. So this has got to be a lagging indicator. Let's talk about how
Mm-hmm.
we would use this information, right? So, a start of housing is, already a little bit of a lagging indicator because you have to have an idea that money's coming in, and you have to make investments, and you're going to start building a bunch of houses, and then when you complete them, they come off, like you said, the assembly line, or they're closed. The last time it was this low, just as kind of a as a reference, right, is as you said, the great financial crisis, 0809 is the last time it was this low. And so is this, maybe showing a little bit of, a real estate recession, or at least maybe a lower in real estate activity? Because, and again, I don't know if there's probably other ways to measure that, but when I see this kind of information where you've got fewer starts than completions, right? More are being finalized, just means there's probably less interest, or now you've got an inventory scenario. Seems like this would be a reversal here. Like if this was to reverse back up, I think that would be fairly interesting because now you've got more inventory, and you should drive down prices. So yeah, I would say as this starts to reverse. So all right, what does this show? Sorry, now that I've did a total brain dump there. What does it show me? It tells me that maybe housing prices have topped out a little bit because and housing purchases have not been great. Maybe this is interest rate related, but it feels like to me that when this does reverse and more housing starts kick in as they work through inventory, that's it's going to bring prices down.
To me, this says the builders are not starting as much because they think maybe the economics aren't going to be as good. Maybe their borrowing costs, they hope to wait and borrow cheaper. I don't know. Ex a recession, though, this might be individuals saying, oh, I'm going to wait to buy a house because I know rates are dropping. Although you could, in theory, refinance the house anyway, right? So I don't know.
Well, lack of interest, but if they're not starting new ones, right? So there's lack of interest of starting new ones.
I don't know about you, but I'm in Arizona. You're in Florida. In Scottsdale, Arizona, they are building a lot of multifamily housing, apartment units, condos. Like those are going up a lot.
There's a lot of home construction in Florida, no doubt.
Yeah, I think when was I in Miami? What was that? December. I saw cranes. Saw a lot of cranes.
Yeah.
All right, let's get back to the equity markets. So stocks are on a bullish streak. S&P has declined in only 1 month since November of 23. So every month's been up except for only one. I don't remember which one that was. What was that?
It's probably April.
Yeah, there you go. Probably April. So, we're looking at a chart here, and it's a bar chart. This has been really strong. And, I've never seen so many people unhappy with a market at all-time highs.
Maybe I shouldn't get started on that. Right. Folks are unhappy with all-time highs and pretty decent returns across the board, right? I mean, if you had, even if you went risk off and you're like, I'm comfortable making the treasury rate at the beginning of the year, you made more this year in treasuries than you did any other year, I believe, in the most recent history. So it's just one of those things that, I don't know why folks are, concerned about returns this year. I'm hearing, I know you've heard a few more than I have, but it's it's interesting. It's been pretty good, everybody.
It's one of those things, and it never used to be like this. And I think when you had the GFC, the Great Financial Crisis, there were people who made predictions and got famous for it. The Big Short, those types of things, and the signs were there. And I think now there's this almost wanting to find the signs and be right about the next downturn. I think that's what it is. And it's not just the people selling books and the people, the usual suspects who are like, hide under your bed and buy platinum coins or whatever. I don't know. Carbon coins. I don't even know But yeah, I mean, I don't know. It's been good. Like we've been on a really good run.
Yeah. No, I mean, and so what's that mean? Does that mean like it's going to end? It's over?
No, I'm not saying that's going to end.
Oh, okay.
I mean, we already talked to look, this is always the case. Barring a recession, markets generally do okay. If there's no recession, you could make an argument that it's the 94-95 case. AI, all these other things. If we have a recession, and anyone look, I'm tired of people saying there's going to be a recession. Because if you're saying that, 2000, what was it? 29 out of 30 leading economists said we're going to have a recession in 2023,
Yes,
something
yes,
like
yes,
that.
yes. So if you sold at the beginning of 2023 to avoid the recession, what have you missed out on?
What, like 40% probably?
Yeah, 220+%
Yeah.
years. Yeah.
Yeah. Yeah. All right. Well, let's take the other case. This was a chart from B of A Global Investing. The top 10 stocks are at a record 37%. So they make up 37% of the S&P 500. And Jay, you were joking. You're like, didn't we just see the top three and then it's the top five? But all right, here's the
So
top
which
10.
one? Which one are we supposed to be worried about? Is it 10 stocks? I don't know, right?
Yeah.
So
What were
the
the,
concentration here. So this is right. Microsoft, Apple, Nvidia, Alphabet, Amazon, Meta, Berkshire Hathaway, Eli Lilly's in there, J.P. Morgan, Broadcom. Like Broadcom, Eli Lilly probably snuck in there on people a little bit. I don't know if
mm,
people realize that Broadcom is in the top 10
is
of
Eli
S&P.
Lilly the GLP-1 drugs?
Uh, sure, right. The weight management drugs. Yeah,
Are they? Okay.
yeah,
Okay.
yeah,
That's the
yeah,
one.
for sure. Yeah. So okay, so that's the top 10, and so they make up the top 10 stocks. Make up. So let's talk about the other times where they made up kind of a record or a high level of concentration within the S&P. So look, there's a few periods here where whoever put this chart together strategically made some circles. So they circle 2000, right? So the top of the tech bubble.
who was the big ones then? Read those off.
Let's see, Microsoft,
Okay.
Cisco. So Microsoft's still there. Cisco's out, GE's out, Intel's out, ExxonMobil. We've talked a lot about ExxonMobil being showing up on a regular amount, decade over decade. Walmart, Oracle, IBM, Citigroup, and Nokia. So really,
Nokia.
yeah,
Wow.
phone company. Yeah,
I know that, but that goes back to if you thought back then everyone in the world will have a cell phone in their pocket, you're like, oh, hand over fist, I'm going into Nokia. No,
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 no, that would so far that would not work out great.
no.
Are they delisted? I'm so sorry, Nokia. I don't know where you stand these days. Um,
Don't know.
then in 2020, so by the way, no pop in like the 08, 09 area, right? Doesn't look like the market was concentrated. That actually looked like it was kind of at a low. And then the next time was it looks like 2020, but it's interesting they don't circle 2022, even though it was higher. But in 2020, the top 10 stocks were Microsoft, same, Apple, same, Amazon, same, Alphabet, same, Meta, same, Berkshire, same. Then here's the new ones: Johnson and Johnson, Visa, Procter Gamble, and Nvidia, also same. So in 2020, when you look at the top stocks, are almost all the same, with the exception of Eli Lilly's and now J.P. Morgan and Broadcom, but the rest are all the same. Uh, I don't know. Seems like it would have been okay if you bought Apple, Microsoft, Amazon,
Yeah.
Alphabet, Meta, Berkshire, in Nvidia. Like that seems okay then. So I'm not sure what we're trying to get across here. Is concentration risk bad? Is
Well,
that
that's what Goldman said last week when they said, "Oh, it's only going to be our base case is 3% a year." They're saying it's concentration is brought it from a 7% base case to a 3% base case.
so?
So
Concentration's bad. Okay.
that's what we're saying. You know what? Somebody should run this and look at the concentration at the market lows. That would be interesting too.
Yeah.
But
Look, is it something? Look, this is the thing about using the index to invest, right? I mean, you're kind of getting this naturally balanced out. Um, I don't know if you picked a different stock, do you feel better? Like, I didn't pick any of the big ones that are performing
no,
really
but you
well.
just gave us the answer, Jay. Imagine you own those 10 stocks in 2000 you just named versus
Yeah.
buying the index. You'd still have these.
Yeah. I'd rather have the
You
index.
you would have way underperformed the index.
Yeah. So I don't know. I'm trying to figure out, am I supposed to try to pick stocks like if I just buy the index, are they saying it's risky because it's too concentrated, or is this chart saying, hey, you should, diversify away because at times when the market is concentrated, it signals the top. I don't know.
By the way, no, I did Google. This is totally half-baked internet research. Nokia is a public limited company listed on the Nasdaq Helsinki and the New York Stock Exchange.
Still in IZ, huh? Okay, thanks.
Is it an ADR? Oh, it is.
Yeah, it's an ADR.
$4.73.
Okay, we'll have to
Nokia.
check out the pit next time we're there.
$25 billion market cap. They have positive earnings, 8 cents.
It's a real
PE
company.
ratio 58. I don't know what their forward is. All right. So I got to come back with Nokia research next week and something else. I already forgot about it. Let's talk
Don't worry
about
it.
the seasonality. We kind of touched on this. 1976, 2023, non-presidential election years and presidential election years. Post-election day, the median is that stocks go up post-election day. This is from Goldman Sachs.
Okay, so what they're doing here is they look at every year, and they broke it out between an election year, a presidential election year, and a non-presidential election year. And after that, I guess this is always the first Tuesday of November.
Mm-hmm.
What happens to the market is that's what they're showing us here, and it looks like, regardless of whether it's a non-presidential or an election year, on average, over that 50-year period, almost 50-year period that they measured, markets seem to go up during that last seasonality, that last part of the year. But great. Look, that's obviously important, and it seems bullish from where we are. But it feels like, on average, markets seem to go up after some sort of September, October volatility, and even leading in. This is what's interesting about what we talked about when we started the podcast, which is, hey, we've got a little bit of fear going in. The presidential years, there is a nice little dip. I'm assuming this is weeks or days. There's a nice little dip about a week before the election, and then shortly thereafter, it looks like a pretty snap rebound.
Yeah,
up, and then up for the rest of the year. But look, this is an average. This is a mix of a lot of different data points here, but on average, this is a decent time of year to invest. I don't know if November is the best average month, when you look at all of the months per year, but it's definitely a good one. May might be better. I don't remember.
Seems to apply too during a presidential election year. You have a run up early, Jan, Feb, and then a retracement, and then there's this gap. That's kind of the April thing that we saw. The other thing that's interesting about this is, if the chart goes from left to right and up and to the right in both cases, doesn't that imply that most year highs are made near the end of the year?
It does. Absolutely. You're right.
And yeah, like a year could be up and say, oh, we're up 20%, but the high was in July and but this seems to imply that a lot of times we see highs near the end of the year.
On average. Yeah.
On average. Yeah. Well, who knows? Well, I'll let you know at the end of the year.
And it also seems to imply that January, February on average are up. But quite frankly, we know January is kind of a mix. January is like a 50-50 month. So
yeah, that's right. Well, we'll have all right. So government spending. I don't know if you saw this, but the government spends more than it takes in, and it's been doing that for some time. It's what is this? About 1.7 trillion. 12-month spending versus revenue. We don't need to get into the numbers here. It's just, I feel like this is coming up again as a worry. And I thought government debt was too high in the 80s, and apparently that hasn't been an issue because we continue. We keep making new highs. So does this ever become a thing? Like, it becomes a problem when it's a problem, but I don't know. I'm hearing a lot of talk about it. I don't know if you are.
Well, I mean, it's certainly a point in the election, and I'm sure maybe you touch on it in the next segment, but it's, yes, I think so, right? Spending more than you make seems to be a problem, except for the fact that, you just issue new bonds to pay for your deficit, which, is inflationary and all sorts of other things. But so far, the way our, debt is structured in this country is just got to get that vote and approve the debt limit, and next thing you know, we're issuing new bonds to meet the obligations. yeah, I mean, this feels like something that at some point will come home to roost. But like you just said, it hasn't mattered for a long time. Markets seem to be operating where this is not the big concern. I mean, it's one. I feel like it's one of those things about our it's nobody gets elected when they're going to cut people's paychecks or cut people's benefits, right? So so you really it's going to take some strong leadership to get this reversed, Derek. I don't know if we have that coming.
No, do you remember one of our advisors who we manage strategies for? I was doing an event. I think either you or I were at it, but we talked about it. And he showed a chart of the expected growth in the net interest payments the US government do. And the
Oh,
projection, this is probably like 10 years ago. They're like, oh, the projection in X amount of years, net interest payments is going to be greater than the national defense spending. I remember people in the room were like, oh my God, like that's insane. And well, we're there. It's, we're
so
over a
would you?
trillion
So
dollars in interest.
when rates come down, Derek, is this helped us out a little bit because you have a little less debt to service?
Well, sure. There's a calculation that you look at the average interest rate, a weighted average interest rate, and all the debt because there's different maturities and there's things like that. And yeah, if the average interest rate comes down, but I just told you that the 10 year is higher than when they started cutting rates. So I don't know. I mean, if they're borrowing very short, yeah, that stuff is gonna be better. But I don't know. And at some point, it just snowballs. Like you talk about a
You can't
numerator
get out from
denominator.
under it, right?
Yeah,
Yeah.
but Japan's at like 300 times 300% debt to GDP. Didn't they just make a new all time high? Took them since '87 to get there, but I don't
Yeah,
know.
yeah. Look, were you trying to end on a grim, depressing
No, no, no. I'm
view
gonna
about it?
go.
Nope.
No, there's something good coming up.
Oh,
It's
oh.
by the way, just so people know, I'm not making light of this. I'm just saying stuff matters when it matters, and I thought it mattered a long time ago, and the market continues to make all time high. Now, the modern monetary theory people would tell you that deficits don't matter, and I think there's a shell game going on there. But that's another episode. Jay, let's talk about earnings next week. We're through it. We're through the big names. We went through
Oof.
the
Whoa.
gauntlet. Nvidia's the one that's left. They're always sort of late. Nike's late, but Nvidia's the one. Next week, what do we got? ARM. We
Still
got
some tech coming through, right? Yep.
Palantir. Is that one of them? Yeah.
Palantir on Monday, yeah, which probably is out by the time people hear this. Yeah.
Airbnb. That's Airbnb and Lyft. Lyft is on Wednesday after the close. Airbnb is Thursday. Those are interesting to me, just from a what's the consumer doing, but not that impactful, I don't think.
Yeah, I
And
don't think we get a lot of the retailers yet, right? So I don't see like the
no,
Targets, Walmarts of the world yet in here. Um,
there's some health. There's Moderna. Did I see Johnson
Moderna's a
Johnson
good
here?
one. Yeah.
Couple in there. There's always some names too that I'm
Yeah,
like, really? They
Baxter's there.
trade?
Healthcare is there. Yep.
All right. Well. So far, though, Jay, the earnings. So this is 349 companies out of 500 and whatever have reported. So 151 remaining. And well, I guess they don't count Alphabet as two. So we had 151 out of 500 remaining. 8.4% so far is the blended result. That's the actuals plus the remaining estimates. 8.4% year over year in earnings, 4.8% growth in revenue. And it looks like of the companies, 77% have beat, 5% have matched, 17% below. And then you look at like technology, 86% have beat
Wow.
estimates.
Yeah, that's
So
pretty strong.
this is back to the original point of, the earnings were pretty good. They didn't like some of the stuff that's come out, but they beat and we're up 8.4% year over year. Like, all right, not bad.
I mean, so what do we got? We got potential, and it looks like interest rates going down, being cut, and you've got earnings growing. That's the combo we like, right? On the two by two, that's the one that's good. That's generally good for growth. No.
Yeah, no, that is good for growth.
Yeah.
And although companies might have to borrow, they might have to borrow at durations, borrowing money, revolving credit, borrowing at the short end. Yeah, that's all very good for companies, especially small caps.
Especially small caps, which has had a nice little resurgence lately. Let me take a look at what the rut is doing these days. Um, yeah, I mean, also kind of hit that high a few days, I guess a week and a half ago when the rest of the market did. But uh, it has definitely been showing some strength in the small caps, and we could talk about what that means, what that indicates, I guess, another time. I bet you'll touch on that in your next segment. I don't know if that's a proxy for something. Who knows?
I don't think we will. I don't think
Okay.
we will.
All right.
But
Well, we'll find out next week when we record this.
yeah. All right. I think all this speculation, though, on our part, or not speculation, all our analysis, it all comes back to just be hedged because honestly, you know, I continue to get, we went through this with the election too. I just put out an article, Jay. I'm so you saw on our site. I'll put a link to it on. It doesn't matter who is in office. It really doesn't in the long run. There could be short term, but markets generally over time go up. We have no idea if they're going to go up over the next year. That's why we hedge. But it's
Yeah, I mean, you don't have to market time when that happens, right? You don't have to
no.
worry like, oh my gosh, should I get out right before the election? Which is one decision you have to make, and then the harder one is when did you get back in? Have you missed it? Are you chasing it? Are you waiting for a dip that never comes, or it's going down? Should I let it? Should I wait till it goes down? I mean, Derek, I'm going to tell a little story. Not too much detail about it, but you and I, even on the, we have a strategy that is a little tactical, but even when we're managing the hedges, you have to make a decision when to pull the trigger on a trade. And as disciplined as we are, as rule based as we try to be, there's always is it better today or better tomorrow to do this trade, right? You
Mm-hmm.
always have these little on the periphery decisions to make. And so on your broader portfolio, for us, on the broader portfolios that we manage, better to be hedged. You don't have to make a day by day decision. If you're going to have a couple days like we saw on Thursday, where the market's down 1.5%, 2%, in those scenarios, then you already have your protection on, right? You could make your hedges tighter or looser, right? Spend a little more, spend a little less, based on how bullish or bearish you want to be. But stay in the markets. That way, you don't have to time when the exit and then the second decision when the entry should be. You have to get two decisions right in those scenarios, right? You got to be right on the exit, then you got to be right on the entry. That's 1 out of 4 possibilities, I guess.
It's kind of like shooting in hockey. You say you got to shoot the puck because it can go in, get saved, go off the post, get a rebound. I guess it can go out of play too,
What
but
sport is that?
that's hockey. But you got to shoot the puck because you got to see one of those. Got
Is
to see one
hockey
of those
still a
outcomes.
sport? It's still a thing
You have the world champions in your backyard.
here in Florida. Are you saying there's a Florida hockey team?
How far away is Sunrise, Florida, from you?
It's I don't know. It's about an hour, maybe an hour 15 minutes.
Okay, so you should go. You should go see your world
See,
champion Stanley Cup. Yeah, Florida Panthers.
hockey is actually so much better in person. I do enjoy going to a hockey game
Oh, it's
as much as I
fantastic.
tease you about it.
I know. We have hockey listeners. We have somebody who's an Ottawa Senators fan. They're a team in Canada, Jay. If you didn't know,
Ottawa.
the
I'm
state,
just
the
kidding.
the the
I
the,
can't.
the
Can't believe
capital
it
of
was
Canada.
crazy.
Come on.
Yes, of course, of course.
They have one of Brady Kachuk plays on that team. He's the brother of Matthew Kachuk, who's on your Florida Panthers.
My favorite team,
Devils are doing well too. Devils are top in the East right now.
Jersey Devils.
Yeah. All right. Before we get to our recommendations for the week, I just want to remind people, Spencer Wright and myself, next segment, we'll be going through some election stuff, which I find interesting. Him and I are sort of amateur followers of this stuff, so we'll give you a prediction at the end of it. But Jay, anything before we bring Spencer on? Anything
I
you want to share?
listen. I've been watching Tulsa King on Paramount Plus with Sylvester Stallone. If I mentioned that already, apologies. That's really
How is the second season? I've only watched the first season.
good.
Okay.
Yeah, no, it's similar to the first season.
Okay. I'm going to check
Did
it
you
out.
like the first season?
I did. I thought it was good.
Yeah.
Yep. Okay.
How about you? Recommendations? Or are you going to jump right into the prediction?
I was watching the Yankees.
I didn't want to bring it up. I'm sorry.
It's
Sorry. You know
it's
what I
just
recommend? Don't watch the Giants. You're just going to hate yourself after.
no. Don't frown. Turn the standings upside down. It's you want to be change the winning percentage from best to worst in the league standings, and then you want to be at the top of the worst. So we get a good draft pick.
That doesn't mean I have to watch it.
No, I wouldn't
Oh,
watch
it's
it. I wouldn't waste
torture.
your time. Just
Oh man, it's
let
brutal.
me tell you what's going to happen. They're going to
I
win
was
some
between
games
the
they shouldn't
Yankees and the
win.
Giants. I was watching back and forth. I was like, I
Yeah.
don't even want, what's happening here.
How to lose a World Series by the New York Yankees. That's look, we're tough on them. Being a Yankee fan, we're pretty proud of the team.
You have high
Arrogant.
expectations.
Yeah, I mean anything less than a World Series championship is a disappointment. So every
There you go.
single year. All right, folks, we're gonna bring Spencer on. Jay, thanks for joining as always. Next up is Spencer Wright and myself talking elections. All right, as promised, we're back on with a little election special. As you know, Jay and I just talked about how, although it doesn't matter who gets elected in the long run based upon markets, there's a lot of interest. And for this, I'm going to bring on another guest, Spencer Wright from Halbert Wealth. Spencer, welcome. And I think this is your fourth or fifth appearance, right? Besides Jay and Mike Puck, you've got the most appearances on the podcast.
Then I'm in very good company then. Yeah, I think that's right. I think it is number 4 or 5. We've done this obviously every 4 years, the last few times, and then we've done the mid-year, mid-cycle elections a couple of times. So here we are again, 2024.
Yeah, there we go. And for our internet, we have a lot of people international, and so this may or may not be of interest, but it is interest because then you have policies that go one way or another. You have different, whether it's trade policy, any number of things. But let's kind of get into this.
Hmm.
And Spencer, I think the way we'll do this, we'll talk about just really what matters, and it's the
Hmm.
electoral college, it's the states that matter.
Sure.
But you and I are going to dig in a little bit to where the polling is
Hmm.
this year versus last time, this time versus 2020 and
Hmm.
2016. We'll look at the betting markets. But
Right.
first things first, right now, and we can put a link to this in the show notes. 270 to win is an interesting site for folks at home playing the home game. You get a map of the United States, and basically, you assume that certain states like California is going to go Democratic, and you assume that next to Kansas, Oklahoma, Texas is going to go Republican. So the map is really comes down to Nevada, Arizona, Wisconsin, Michigan, Pennsylvania, North Carolina, and Georgia.
Yep.
And you've got to get 270 electoral votes to win. So, I mean,
Right.
Spencer, there's toss-ups right here
Hmm.
in this map and play.
Sure. All these states, these 7 are the ones who are going to determine who gets to form the next government, who's going to take over, for the next 4 years. Is it going to be a continuation, or are we going to see a change? And so, I mean, getting right into it, starting out west, Nevada has shown recently that it's maybe leaning toward Donald Trump, which is interesting. One of the things that maybe before we get into the state by state thing, it might be useful to make some comparisons to where we were on a large scale at this time in the last couple of cycles. So right now in 2020, Biden was ahead in the polls. Um, Depending on what poll you looked at, he was either substantially ahead or ahead by 4 or 5 points. Hillary also ahead at this time around 3 to 5 points, depending what you looked at. And right now, Trump is ahead in the aggregate by around 0.5% or so.
Yeah, and I mean, to put some numbers on this, and on election day, Biden was leading by 7.2, let's call it percentage points.
Hmm.
Hillary was leading by 1.8 percentage points. Trump today, and this is based upon the Real Clear Politics averages, is ahead 0.3%. So
Yeah.
he is over performing based upon the other two cycles. And you would say, okay, Spencer, is this a fair assumption? If he's around minus 1.8 deficit or higher, that's good for him, right?
Oh, absolutely. I mean, this is the most robust Trump has ever been in polling. And if the polling is worth, is worth anything, there have been some significant polling misses over the last few cycles, but they've always missed in one direction. They've always overestimated Democrats by some degree. And the question, of course, now is, have these polls been corrected to account for those previous polling errors? And I think the answer is probably yes, but I don't think they're fully corrected. In fact, I don't know that you can fully correct a poll. So instead of maybe being Democrat +4, let's say, maybe they're only Democrat +1, which means if that's the case, let's give them the benefit of the doubt and say they've managed to get their game together and they're only off, only leaning toward Democrats nationally by a point in the aggregate. That means Trump still wins the popular vote because it'll be Donald Trump +1.5.
When you say the polls are Democrat +4, does that mean they're oversampling Democrats? Is that kind of what you mean by that?
Yes, yeah, they're
Okay.
oversampling Democrats, which creates this inflated result because their assumption built into these models is that the electorate is skewing, typically +1, +2, maybe even +3 Democrat, which in the past hasn't necessarily been wrong, that the generalized electorate has leaned Democratic for maybe the last 12 years or so. Such is not the case now. In fact, this morning, right before we came on, Gallup released their final numbers that says that the American electorate is +2 Republican. And that's, I believe I'm right in saying that's the first time that's happened since 1980.
Well, all right. No, I see what you mean. So basically, if you have 100 people in a room and you start with a poll, you say you can't look at 50 Republicans and 50 Democrats in theory when we do a poll. We've got to start with 54. I'm going to screw the math up here, but you know what I'm going. Easy math. 54 Democrats, and we're going to survey 46 Republicans, and then we're going to take those responses, and that determines. So
Right.
I mean, I guess the question is, that's the big thing. We know that the pollsters underestimated Trump's vote in 2016, certainly in 2020 as well, to some degree. The question is, did they correct those polling errors? And is it, are we really in a 50-50 tie? Which is
right. Well, the average miss, right? If you look at those two cycles, the average miss is around 4%. Maybe slightly more than that. Let's say they have done some correction, right? They've been mindful and tried to be as accurate as they can. But let's say that's only, down to +1 D, +1 Democrat. That means Trump's still up 1.5%. One of the more accurate polls in the last several cycles has been Rasmussen, and they're often kind of blasted as being a Republican poll, which they aren't. They're independent. But their model this entire cycle is Democrat +2.
Oversampling Democrats, right?
Yeah, oversampling Democrats by 2, because they wanted to be in line with what the big surveys said was what the electorate was. And now that we have the new electorate numbers, of course, it's too late to go back, and you can't go back and resample everything. But they feel like now so everyone who's been polling, given what Gallup has just released, may have been undersampling Republicans. So the answer is for Trump to be in this position, even at +0.5%, for him is a very strong place to be. You'd certainly want to be there because we talk about this for the popular vote, which again doesn't matter in the U.S., Trump could still lose that popular vote. If he loses it, let's say the polls are wrong by 1%, and Kamala wins the popular vote by 50 basis points or 50.5% to 1%. Trump could still have enough vote in the states that matter to win.
Well, and there's also implications, and I want to get to the electoral college in the states, but to kind of tie a bow on why the popular vote, why the trends matter. And by the way, the trend is important too, because as early voting has started, you would say, well, I'd rather be surging than falling and hanging on. Nate
Right.
Silver had a piece out, and I don't know if I have the link handy. I certainly, if I find it, I'll put it in the show notes. But he basically said where the popular vote winds up being portends to the probability of somebody winning the electoral college, which is how you win the presidency. And
Mhm.
his point was, if Trump is leading in the popular vote, which he is right now by a slight margin, the
Sure.
probability of him winning in the electoral college, I believe, goes north of 70%. But
Mhm.
you got to win the electoral college. Let's talk
Right.
about that, though. And
Sure.
there are, so 270 to win, you can actually see there's 20 different winning combinations for Democrats, 21 for Republicans, and this will get a little spicy. 3 potential ties for the electoral college. We'll
Yeah.
talk about what happens there. And so basically what happens is you say, okay, well, Pennsylvania has 19 electoral votes. Remember, you have to get
Mhm.
to 270 to win. So when you're looking at combinations, and we certainly will go through all of these, it really starts with Pennsylvania, because if somebody wins Pennsylvania, then really it starts to get tougher for people. So
Well,
let's talk
the
about
path,
Pennsylvania.
yeah, the paths get very narrow, right? Um, Pennsylvania is the linchpin, really, for both sides. Were Trump to carry Pennsylvania, um, he would be in an extremely strong position because, in that case, uh, Trump would have a number of paths open to him. His probably the path of least resistance to Trump, with Pennsylvania in his hip pocket, would be um, Arizona, Georgia, and North Carolina.
Yeah,
Uh,
that's it. And
yeah,
election over. Yep.
election over. Yeah.
Yeah. Yeah.
Now, for Harris, were Harris to carry Pennsylvania, there would be a huge sigh of relief on election night for the Democrats, and for her, she would have to.
I mean,
Um,
Michigan, Wisconsin, and
yeah,
Pennsylvania, done.
yeah.
Election over.
Michigan, Wisconsin, done.
Yeah.
So Pennsylvania for both sides is the key. Now, Harris takes Pennsylvania, let's say. Trump has his Sun Belt states, and maybe even including Nevada. Nevada in these calculations is kind of on the periphery, but let's say Arizona, Georgia, North Carolina. Let's say Trump wins Wisconsin, election over. Let's say Trump wins Michigan, election over. So Trump needs to pick off one of the 3 Rust Belt states.
Let's look at where Trump is versus Harris today versus where he was against Hillary and the other ones. So
Mhm.
I'll throw out the numbers here. 2016, Clinton was plus 3.5 on this date in 2016, where we are today.
Mhm.
Biden in 2020 was plus 4.3. Trump is up plus 0.3.
Right.
This seems to be positive for Trump.
Sure. I think so. And if one of the things that is different this year, and some people say, well, maybe you shouldn't read too much into this, and I would agree because people still have to come out, in person and vote. But in 2020, especially, if you look at it, the Democrats had and they're excellent at this, by the way, historically, at getting a lot of early vote banked in these critical states. And the Republicans did not really engage in that effort last time, and it cost them. So in 2020, the Democrats had 1.1 million votes banked in Pennsylvania before anyone stepped into a voting booth on election day. That is a mountain to overcome, an absolute mountain. And Trump almost did it. He fell short, I think, by 80,000 votes in Pennsylvania, something like that. Ended up being like plus or minus a 0.4%. So where Biden was forecast had a significant lead going in, he only won the state by less than 1%. Right, 80,000 votes, even with that mass bank of vote. Well, right now, because the GOP has invested tremendous resources and personnel into engaging in, ballot harvesting, trying to build a large block of vote before election day. They said, well, we're obviously very behind in this type of activity. We really need to get on board with it, and they have in a big way. Right now, there is still Democrat vote lead in Pennsylvania. But as of this morning, I believe it was only about 400,000 votes. So basically 1/3 of what it was in 2020. And so Trump being significantly behind in the state, according to the polls, and facing a huge mountain of banked vote, still almost won the state. So one could extrapolate and say logically, if you have a much smaller amount of banked vote for the Democrats, Trump actually, call it tied to slightly leading in polls in Pennsylvania, and if they have the same level of turnout, it's easy to see why lots of people are saying Trump is likely to win Pennsylvania.
Yeah, I mean, it's a different time in 2020. I mean, it was really just all mail-in ballot last time, I think. But no, you're right. I mean, there's less mail-in ballots that were requested this time,
Right.
So I think what's interesting though is what we don't know is the election day turnout. Like if you're Harris and you're looking at this and you're saying, okay, we may not be outperforming like Biden did, but maybe our people just didn't request the early ballots, and they're gonna show up in mass on.
And you know what? That could happen. I mean, obviously that could absolutely happen. Historically, though, again, all we have to look back on is what has gone before. Republicans vote in person on election day in almost overwhelming numbers compared to Democrats, who tend to vote early. So,
by the way, you and I both sent our mail. You're in Texas, I'm in Arizona. Both of us have sent in our mail-in ballots already. I hope that would stop the text the commercials, but no, it hasn't.
It has not. I voted early. I voted in person early here.
Oh, okay. Okay.
My daughter, who voted for the first time, and she was so proud.
Oh, that's great.
Sent her mail-in ballot from Virginia, where she's going to school. Mailed that in, and I'm sure that got thrown into the pile. Most people in Texas, there's been a large, early vote here. I can tell you, being a resident of the state my whole life, doesn't normally happen. Texas is a big day of state, as many states are big day of states. But the GOP has embraced this methodology, and I think it's going to work well for them, because the story I just told about Pennsylvania, you could say about all the Sun Belt states: Nevada, Arizona, Georgia, North Carolina are very similar. In fact, all of them, I believe, have record numbers of GOP early participation.
Well, let me go through these. I'm going to go through each of these states. We'll kind of set the stage for the listeners, where the polling is today versus 2020 and 2016, and then we can kind of come back and think about some of these states. Michigan. So I'm going to go one by one. I'll go through the data and then we'll kind of discuss. Michigan, Harris is plus 0.8 up in the polls. Biden was plus 8.2. Clinton was plus 6.3. We go to Wisconsin. Harris is up 0.3 in the polls. Clinton was 5.4. Biden 6.7. We go to Arizona. Trump plus 2.4. In 2020, it was tied with Biden. Plus 4 against Clinton in 2016. We go to North Carolina. Trump 1.4 in the polls today. 2020, Biden was up plus 0.6. Trump was up plus 1. We go to Georgia. 2016, Trump was plus 5.7. 2020, Biden plus 0.4. Trump plus 2.6 today.
Mhm.
Nevada, Trump 0.9% up today. 2016, he was up 2. 2020, Biden was up 4.
Mhm.
Those are the ones that we sort of have data on. And, you look at some of these, and I would say that Harris is underperforming Biden and Clinton on this date versus this exact date in those cycles. This tends to really, I mean, this is a positive for him. I would say, though, North Carolina is probably closer than the Trump camp would want. And I would say
Mhm.
Georgia is, he was up 5.7 in 2016. He's only up 2.6.
Right.
So I'd say he's underperforming in Georgia and North Carolina. Wouldn't that be something if Georgia and North Carolina Harris gets and Trump winds up getting Michigan and Wisconsin, like gets a path that nobody sees coming. But I mean, like you said, Pennsylvania is the linchpin. Whoever wins that, the path gets very easy. There's other paths,
Sure.
definitely. But I mean, am I right when I look at this and I say he's probably doing worse
Well,
than Georgia than he'd want?
yeah, I mean, obviously, historically, Georgia has been a Republican state for a long, long time. And it voted very, very narrowly for the Democrats in 2020 by less than 1%. And right now, um, the early vote in Georgia is extraordinarily favorable to the GOP, so they're banking a vote there ahead of Election Day. Trump's up around 2.5% in the aggregate, though there are individual polls, obviously, because in aggregate it's just a derivative of a bunch of polls that show more recent polls here toward the end that show Trump up considerably more than that. So I'm not sure he's in trouble in Georgia at all. You want to be doing better there in the aggregate, but I think Georgia's pretty solidly going to be in the Trump column. I don't know that you can feel as good about North Carolina. And there are a lot of unknowns about North Carolina that were introduced in the last few weeks that you can't do anything about, but certainly if you're in the Trump camp, you'd rather not have had them happen. So people have been disrupted by the hurricane,
Right.
and it's unknown how that's going to affect voting. Early voting has been good in North Carolina. However, again, it would appear to be still reasonably close. Um, Although a couple of recent polls have had Trump up by 2 or 3 there, we'll see. Apparently, and again, I don't know if there's any way to corroborate this, but I've seen several accounts in the last few days that have said that the Harris campaign has taken their ads down in North Carolina. Normally, when a campaign does that, they're kind of seeding the state. Either they think they've already won there and there's nowhere else to go, which probably is not the case here, or they think they can't win it and those dollars are needed somewhere else. And if the articles are to be believed, and they're in different sources, they took the ads down in North Carolina and put that money in Virginia.
Yeah,
So
Virginia's a lean. It's considered fairly safe Democrat, so that
I
would be
would
a
think so.
surprise.
I
Yeah,
mean,
if that flipped.
for Virginia to go red, if that happened early on in on election night, it would portend very bad things for the Democrats. I don't think that's going to happen. Um, it might be very close in Virginia. Governor Youngkin today said it's much closer than people think, but that doesn't mean that the Democrats aren't going to win there. But I think North Carolina is close, but I think Trump does carry North Carolina. Is it closer than they want? Yes. But most of their resources have been spent, I mean, unsurprisingly so, in Pennsylvania. I mean, both campaigns, if you look at the sheer dollars that have been plowed into Pennsylvania, and God help those poor residents of
Well,
that
what about
state.
us in Arizona? But no, we have 11
Yeah,
electoral votes. Pennsylvania has
yeah.
19. That's the
Has
biggest
19.
chip on the board.
$1
So
billion has been spent in Pennsylvania. $1 billion has been spent
hang
there.
on, let me look at my unopened text. If you've texted me, if you're a friend of mine and you texted me, I'm sorry. It just gets mixed in with all the political stuff. I have 74 unopened text.
Oh my gosh.
It's brutal. It's just
Yeah.
I'm looking
Yeah.
through. I get politicians by name texting me. I get campaigns. I get polls. I get everything.
Yeah.
And
It's
God
horrible.
help you. I was watching the World Series, and on network TV, every darn commercial was a political commercial.
Oh, I have no doubt. Fortunately, we are completely immune from that sort of barrage here in Texas.
Well, you're not having the party that Pennsylvania is for sure. But
Oh no, they are Pennsylvania, Michigan, and Wisconsin are under continual nonstop barrage from both sides. I'm sure it's an absolute misery. But I
I,
think Trump is very strong in the Rust Belt states. He would like to be stronger in North Carolina, and there are some unknowns there, which you can't do anything about. But I think even given that Trump picks up Arizona, Georgia, North Carolina, and I'm also going to say Nevada. Now, Nevada, as far as the math goes, is not going to put anyone over the top, but
no, it's
Nevada
only six, right? It's only
yeah,
6 electoral
is
votes.
an
Yeah.
interesting bellwether because a Republican has not won Nevada um, since 2000. So it's been 24 years since the Republicans won Nevada, and no one's ever won Nevada and lost Arizona. One of those little interesting election quirks. But I think Trump picks up Nevada, Arizona, Georgia, and North Carolina. I think those are as safe as one can say at this point. Those are safe in the Trump column.
All right. Before we give our predictions on this presidential, we are amateur election and political pundits, and I say amateur with a capital A. There's a spicy one on here, and the spicy one is there is a 269 to 269 electoral college tie. Before we get into the possibilities for a tie, I pulled this up. Elaine Kamrick, a senior fellow at the Brookings Institute. Okay, so we'll assume she knows more than we do.
Sure.
She said, ultimately, if there was a tie, we have a pretty good rule book for where things have to go. She said the election moves to the U.S. House of Representatives, where the newly elected members of Congress, remember, Congress is sworn in before the president in January, they would vote on who becomes president. But the way it works is each state, regardless of the size of the state, gets one vote. So, like if California has a lot more people in Congress, they only get one vote. And without getting in, going through the numbers, that likely means Trump would win in a tie because more states, every state gets a vote. There are more states in red than blue. So
that's right. And so a tie, which would be really pretty cool to see from just an experienced and election geek, sort of level. We've never had anything like that happen in the modern era, and it would be nice to see that, and then how that all plays out. I think it's unlikely, but there's always the chance that there could be a tie. But that's how it would work. And a tie would go to Trump.
Let's go to, and by the way, I don't know that they're limited to who they could vote for. Like in theory, they could vote for you or I. Or
sure.
Yeah.
Sure.
I mean, I don't know why they wouldn't, but yeah, I mean, that's
and they should.
But generally, there's some game theory there because if one party says, "Oh, we're," unless everybody's on board. But anyway, those are there's three scenarios,
right?
And just for the listeners, I'll go through these. What happens is in all of these scenarios, Trump has won Pennsylvania. But then one of them is that he wins Georgia and Michigan, and Harris wins North Carolina, Arizona, Wisconsin, Nevada. The other one is, again, assumed he wins. Trump wins Pennsylvania, Harris, Georgia, Trump, North Carolina and Michigan, Harris, Arizona, Wisconsin, Nevada. And the third one is, again, Trump wins Pennsylvania. She wins Harris's Georgia, North Carolina, Arizona, and he picks up Michigan, Wisconsin, Nevada. If any of those combinations happen, it is a electoral college dead heat, and it goes to the newly elected Yeah, the newly elected Congress there.
Yep. Which again, in any of those scenarios, assuming there's no, some things aren't gamed out or what have you, Trump wins a tie.
Yeah, and I'll have to dig in more about whether they actually. I believe they're not constrained by who.
I don't think so. They're not electors, right? So
Yeah, yeah.
they can cast their vote for whomever, as
They
far
could.
as I understand it.
Yeah. Well, I didn't read. I pulled up the article, and it's yeah. Anyway, I pulled up the article, and that's about as much research as I've done that. But again, a senior fellow at the Brookings Institute. I'm going to assume that Elaine is much smarter than us. All right, let's bring this. By the way, that does have implications for the market, and I haven't really thought through if it was a tie, whether the market would just be a continuation of us going into the election, or whether the market would sort it out really quickly what the process is and what's going to happen. And maybe
Well,
it's not event
yeah,
because the
that
process.
markets despise nothing more than indecision, right? Than an unknown. And that's why long term, as you pointed out in your previous segment, whoever ends up with in government, in the long run, it doesn't make that much difference, um, as far as the markets are concerned. In the short term, there could be a lot of volatility, I think, in a tie. We don't know what would happen, but I think there would be some short term volatility if things ended in a tie. However, in my opinion, that will not happen.
It'd be pretty cool though to see that,
It would
wouldn't
be
it?
cool. It
Just
would be
from
very
a
cool. Just to see the machinery and the pieces move and what happens
yeah,
and the
yeah,
reaction. Yes, it would be very cool.
yeah. It's yeah. All right, let's leave it there. All right, so give me your prediction. All right, so we're not going to go through the House or the Senate
Mhm.
in the essence of time. I would say the House is. I'm going to be boring. It's a toss up, but I think it's going to go. Whoever wins the presidency, I think the House goes a little. So
The
if
House
Trump
is going to
wins,
stay.
then
Yeah, the House is going to stay in the hands of the Republicans. I think they're not going to have massive expansion of their fairly narrow majority. I think it's going to be largely status quo in the House. Plus or minus a small number of seats. It's not going to be a large movement there, but I think they do hang on to it. The Senate is the GOP is going to take control of the Senate. The only question is by what margin.
yeah, it's either 51-49 or 52-48, and the
Yeah,
one that's open is Ohio. When I say
right.
open, that's the coin flip right now on the map.
Yeah,
So
I don't know they can do better than 52. It would have to be a very big night for them to do better than 52. But I think 52 is their ceiling, and I think that's where they're going to end up.
yeah, and conversely, I think the Democrats probably can't do better than. I mean, 50-50 would be the very best that they could do.
That would be an enormous victory for the
Yeah,
Democrats to end up
51 is
to,
probably the likely.
right. So
Yeah,
all things being equal, the GOP is going to control the Senate almost regardless of what else happens.
it's just for anyone who's out there, kind of being like, "How do you guys know this?" It's who's up for election. Not all senators are up for election, and so the seats that are up and the people that are retiring, like Manchin in West Virginia, it just sort of it is what it is with the map.
Yeah.
So we just have a little more certainty there. And
Yep.
all right, and then president. Last time, I think we both said. Did we both say Trump last time? And we were
We
wrong,
we
right?
we we did. We said
So
last
why
time
should
we
people
said.
even listen to us? They
Yeah,
shouldn't
I
listen to
know.
us.
Well, last time we said Trump in a squeaker. We
Yeah,
said it was going to be close, but I felt like that Trump was going to do a repeat of his 2016 performance and win by like 40 to 60,000 votes across 3 states. What happened was the opposite. Joe Biden won by 40-ish thousand votes across 3 states.
yeah. It was small for sure.
It was far closer than if you just looked at the map and didn't look at the internal numbers, you'd say, oh, Biden won quite a victory. Well, no, not really. It was very close.
Yeah.
This time, I will be happy to tell you, I don't think it's going to be very close.
Oh, you're
Um,
calling a landslide, huh? Wow.
I don't know if I would say
Aggressive.
landslide,
Yeah.
but I think Trump ends up with 312 electoral votes, which is 6 more than he got in 2016. I think he's going to win Nevada, Arizona, Georgia, North Carolina, Pennsylvania, Michigan, and Wisconsin.
Okay. I'm going to say Trump wins with 280 electoral votes,
hmm
which is
That will give
Pennsylvania,
him,
Georgia, Michigan, Arizona. I think he steals Michigan.
yeah,
Steals is not the right word. I think he wins Michigan. I think based upon where Harris is compared to the prior 2 cycles, it seemed, unless the polling is really spot on. So you're at 3. How much did you say?
312.
312.
Yeah.
I'm 280. We didn't. I'll just mention the betting markets really quickly, and then we'll kind of wrap up.
Yeah.
Yeah,
Poly market.
Polymar. Yeah, whatever it is. So, yeah, you probably shouldn't, based upon our track record, you probably shouldn't go to the
Do
bank.
not wager. Do not wager on an election. Please don't do that.
Yeah. So if you look at the betting markets, I mean, Trump is basically up. If I look at the implied betting markets, so this is Kalshi and this is Polymarket, they would have Trump at 287, Harris at 251. So win by 36. And, there's like a 61.8, as of this morning, 61.8 probability, or it's 61.8 to 38. I don't know, whatever it is. Trump is leading in the. So people are putting real money to work.
Billions.
Yeah. I don't know.
Billions of dollars in Polymarket, a couple billion being wagered
If
on the election.
If you're betting on this, go watch a game show. Like,
yeah,
put your money in index and. Yeah. All right, Spencer.
Yeah.
So, all right, there you have it. We did it, and we both are picking Trump by different margins.
Mm-hmm.
I think, yeah, I agree on the Senate, and I think if I'm picking Trump, I got to say the House goes. So we'll see what happens. We'll know Tuesday night. This will be released. We're recording this on a Friday. This will be released on Sunday, and for everyone listening, you'll know by Tuesday, or you won't know, or you'll know by Wednesday or Thursday or Friday, or
yeah, or some number,
or in January.
some number of days past Tuesday plus 10.
There you
Things
go.
are really weird.
Yeah. All right, Spencer. Thanks again for coming on, and you're the third most guest appearances on and this is what, episode 297. So good job, Spencer. Thanks for coming
I'm
on.
Honored.
Yeah, no, absolutely. Absolutely. We'll do it again in 4 years at least.
All right, Derek, take care.
All right, see you, everyone.